Ladies and gentlemen, good day and welcome to Q4 FY24 earnings conference call for Tata Power. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Praveer Sinha, MD and CEO, Tata Power. Thank you, and over to you, Dr. Sinha.
Good afternoon to everyone, and thank you, Darwin, for the introduction. We have with me my colleagues, Sanjeev Churiwala, CFO, Mr. J.V. Patil, Financial Controller, Mr. Kasturi and Mr. Rajesh from the Investor Relations, and some of my colleagues from Corporate Communication and Finance team. Before I share with you some of the salient features, let me just briefly cover about the power demand in the country. Last year, like the previous year, the demand of power grew by nearly 8%, both in terms of the peak demand as well as in terms of energy. But what we have seen in last 2 months, month of March and April, even before the summer has really started, there has been an increase of nearly 10.5% in terms of energy, and peak also reached a level of 224 gigawatt on 29th of April, and this on a corresponding basis last year was 208. So there is a huge increase in demand. The expectation is that we will have a peak of 260 gigawatt, and there is a lot of work that needs to be done to ensure that this peak demand is met, as also the energy requirement is also met. We have from our side in Tata Power taken all steps to ensure that all our plants operate at full capacity. All our coal-based plants, whether it is domestic coal-based, have full availability of coal, as also our imported coal-based plants at Mundra and in Trombay have full availability of coal, and we will be producing at 100% availability all these plants. Similarly, all our renewable plants are operating at full capacity, and we do expect that in the coming months, these will be able to generate enough quantity of coal for the requirement of the consumers. We have tied up in our distribution business also the total quantity of coal, and we do expect that the power that is required for all the distribution companies will be adequate to meet. In fact, we have seen in the month of April, we have nearly 25% growth in demand in many of the places in Odisha, including Bhubaneswar, and we have been able to successfully cater to that. And in fact, some of the places in Odisha, we have seen that this is the second consecutive year of growth of demand by nearly 20-25%. So I think we are well poised to meet the demand, though it is growing at a very, very fast pace. On Tata Power, we have shared with you both the Q4 results as well as the annual FY24 results, and the details are already there. The presentation has also been uploaded, and I'm sure you would have got time to go through that. I'm not going to repeat the numbers, but I will just take you through some of the important aspects of our business. Our coal-based and hydro plants, our generation businesses have done exceedingly well in the last quarter. They have performed at full capacity, and that is why it gets reflected in higher revenue as well as higher EBITDA and PAT for all these businesses. Similarly, in transmission and distribution, we have seen our transmission businesses have also done exceedingly well. Our distribution business in Odisha, Delhi and Mumbai and Ajmer have also performed exceedingly well. There were a lot of challenges in Odisha. We have been able to overcome most of them. And going forward, you would see substantial improvement in the financials of Odisha, because we have been able to clean up a lot of issues which were there about the earlier billing and their collection. And what you would see now is a huge improvement of the performance of Odisha DISCOMs. In fact, within a short span of 3 years, all the 4 DISCOMs have started making profit. And this is much better than what was initially planned when we had bid for these projects. Coming to our renewable business, I think we have done exceedingly well in this year. Many of the projects which we could not do it in FY22 and 23, whether they were third party or our own utility scale, we have been able to implement. We have a huge backlog of projects, both third party and utility scale, which we will be implementing in next 24 to 36 months. A lot of it is planned in FY25. We expect nearly 4 gigawatt of projects that will get implemented in FY25, out of which nearly 2.5 will be third party and 1.5 will be our own utility scale. And then we will be doing the total 5 gigawatt of our balance in FY26. So a lot of capacity addition will happen. We have also been able to commission our manufacturing facility in Tirunvalli. Our 4 gigawatt module plant is commissioned and is fully operational. And our cell plant of 4 gigawatt will start getting commissioned from next month. And over 3 months, it will stabilize and reach the peak capacity of 4 gigawatt over there. So we will start then producing 100% domestically manufactured cell and module, which is a requirement for many of the bids, including the rooftop program of the government. We have also done exceedingly well in our rooftop business in last quarter, and the performance has shown not only very good margins, but also very good quality of service that has been provided to the customer. And we continue to have a leadership position in rooftop. And with the PM Surya Ghar Yojana program, we expect that we will play a very, very active role going forward in the market to create the rooftop solar for the consumers under the government scheme. So we are expecting that our renewable business will really start showing great results FY25 onwards. Similarly, in our EV business, we have nearly 86,000 home chargers, and we are number 1 in the market with more than 5,500 public chargers and nearly 900 of bus chargers. And our emphasis has been that the fleet chargers, bus chargers, home chargers and the public chargers will support the e-mobility initiatives of the government and many of the OEMs with whom we have tied up. Coming to our some of the other initiatives, we are the only power company in the country which has taken the science-based target initiative, and we have a very, very robust plan to implement it over a period of time. Similarly, we have taken a lot of initiatives in our other operations, including HR, where we have been awarded number of recognitions we have got in terms of the best employer. Our rating also has improved in the last quarter, and it is today AA+. So I think what you would see is that all in all, the performance of the company has improved drastically. We do expect that this will continue. We also expect that the Section 11, which was up to 30th June, has now been extended up to 15th of October. And with the type of demand of power in the country, we expect that we will be able to continue generating from Mundra plant. And since in merit order it is still very, very attractive it will continue to schedule power to the beneficiaries under the same. So we are very confident that whatever we have done this year and in this quarter, we will continue to work on that. A very strong foundation has been made in the company. This is the 18th consecutive quarter in which we have shown a growth in profit. And the strong foundation and the fundamentals of the company will ensure that our performance in future also continue to have similar trend. And we look forward to your continued support in this direction. I would now request Neerav, if any questions are there, we can ask.
Thank you. Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much and congratulations on your numbers. My first question is with respect to the Tata Power Solar Company. Rooftop seems to be a big opportunity. Do you have any target revenue from that for the same? And the second part of the same business is how should one think about margins from TPSL?
So let me try to respond to this. One is that based on the scheme that the government has announced, the main benefit is to consumers who use 1, 2 or 3 kilowatt of rooftop solar. The trend that we have seen based on the people who have registered the first 1 crore household, more of it is 3 and 2 kilowatt. So what we can expect is an average of about 2.5. So it means about 25 to 30 gigawatt of rooftop has to be implemented in next 3 to 4 years. And considering that we already have a market share of nearly 20%, we are looking at something near to that. Mind you that we already have nearly more than 2 gigawatt of rooftop solar already installed in the country. So we have the largest penetration with 20% market share. And the number 2 in this is someone with 2% market share. So we have a huge gap between us and the next players and the next the number of players in that range. And we expect that we will maintain our leadership.
Okay, but do you expect any constraint in terms of DCR availability of modules here, or you think you'll largely do based on your own capacity?
So we are setting up this plant only for meeting the DCR obligations. So the whole purpose that we will be able to use it for our own utility scale, group captive, as well as for rooftop opportunity that comes up.
Puneet, Sanjeev Churiwala here. Just kind of wanted to tell you and all the analysts on the call that every quarter, including this quarter, we upload a very comprehensive financial analysis deck. This time the upload is about 66 slides where you will find all the segmentation, dissection, trends to help you do a much better analysis. We just want to thank that, the quality of the analysis that is happening of late it has significantly improved, which gives the reader of those reports, including all our investors, a good confidence on where the company is performing. To your question on how the solar rooftop EPC and other EPCs are doing, you can look at the slides number 35, 58, and there are a lot of slides which gives you a complete insight into that.
Correct. It talks about roughly 8% margin. Is that the margin that we should be running with?
So, if you look at the EBITDA margin, yes, it's about 7.6. For the full year, it's about 6%. Our endeavor is on the PAT margin that we work on a 4 to 5% PAT margin. That is what we have always been telling. This quarter we have landed up with 4.3%, and all of you are aware that the market was quite choppy at the beginning of the year. But with our own module manufacturing now going live and the solar fan, the cell and the module prices coming in, we are confident that we'll be delivering the margin expectations that we have. So both our EPC business as well as the solar EPC overall is doing phenomenally well. As you can see, over the last 5 years, it has a CAGR of 17%. You can expect, perhaps a better growth coming in.
Okay. And in terms of just disclosures, can you also talk a bit about your coal infra business and Tata projects? What kind of profits are they contributing?
So Tata Projects is quite a turnaround this year. In fact, when we look at the Q4 numbers itself, slide number 7 crores is the profit this quarter. Yeah. Sorry, the profit for this quarter is about 32 crore, and it was a significant loss-making company till last year. This year, for the full year, the company is now completely turned around with a very solid order book position, and the company is making profits. So hopefully, with the order book that we have, we are sure that the Tata Projects will be delivering a better results going forward as well.
Okay. And also, can you talk about how much more money should we expect to come from the ITPC dividend? And also Arutmin.
Sorry?
So how much more money should we expect to come from ITPC dividend which came in this quarter as well, along with Q3? And also how much balance remains from Arutmin that can still come?
So Arutmin we have already sold, and that disclosure is already made in the notes of accounts. The sale was signed up a few years back, and we were expecting all the money, the sale proceeds to come. So that has come last year and this year, and accordingly in Q4, that investment in the books is now transferred. So we don't have anything coming from Arutmin.
Nothing more from Arutmin. Okay.
Yeah, when we look at ITPC, ITPC is a good turnaround story for us.
Yeah.
Good turnaround story for us. We had last year entered into a settlement agreement with ITPC, which was duly acknowledged by the regulatory bodies over there. As a result of which we have received 90 million of dividend this year in cash. We also expect around 40 to 60 million of dividend that next year as well. Besides, the company is making about $30 million of profit now every year. So hopefully we would expect 10 to 15 million dollars of dividend on an ongoing basis.
So 10 million ongoing and 60 million for next year.
Yeah, so 40 to 60 million is what we're targeting. That will include the entire dividend for next year.
Okay, so including the 10 million.
Yeah, 10 million is going forward as a run rate.
Yeah. And lastly, if you can also share if there are any remaining tax benefits from the merger of CGPM, what is the quantum of that?
Sorry, could you repeat that?
What is the quantum of tax benefit that is remaining from the merger of CGPM?
You're talking about the carry forward losses and business losses?
Yes. Yes.
So it was a significant amount, and of course, given our profitability is improving every year, and we have business profits also, business income also, that is resulting in utilization of this carry forward losses and business. But of course, this is a tax position, so if you want, we can send you the breakup separately.
Just the unabsorbed number remaining on the books, maybe.
Yes,
okay. Cool. I'll come back in the queue. Thank you so much.
Thank you. Next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good evening, sir. And thanks for the opportunity. So my first question is on the utility scale renewables. So last year, I think there was huge bidding which happened in the industry, but I think we didn't participate in most of them. What do you think about the way forward for FY25 and FY26?
Last year there were nearly 50 gigawatt of bids which were supposed to come. of course, all of them could not come. We expect this year also that the government has plans to bring 50 gigawatt of bids. So there are large number of bids coming. We ourselves won large quantity of bids, especially the ones which are the bids which are hybrid bids or the fixed duration renewable energy, that is FDRE bids. So we do expect that this year also many of those type of bids will come, hybrid as well as ones with solar, wind and storage. And we will actively participate in all of them. We of course expect that since these are little complex bids, there would not be too many players who have the capability to execute projects like this, and thereby we will be in a much better position to win better bids, as also win with much better margins.
My question was about the rule. Our participation was very selective last year. Was there any particular reason for us to not participate aggressively in the bid?
We always have selective. For us it's about getting good margins, and we have earlier also expressed that it's not question about participating and winning, but it's participating in right bids and winning them at good margins. And we will continue to have similar focus in the coming year.
And if I could add, if you have a look at slide number 24, you'll get a trend in terms of how the reverse auctioning tariffs have moved significantly, and as such, we have actively participated in the bids. In fact, the bid position that we are into today, we already have a 5 gigawatt plus of project execution in the pipeline, which was never the case. And to that extent, we have a very healthy bid position also last year. Overall, we have won close to about 1.8 gigawatt, and largely that too in complex, which is a combination of hybrid as well as FDRE projects. So I think we are in a much better position than we were a few years back. So I don't think that comment that we are not active, which is correct, in the sense that we have not participated deliberately into pure solar or pure wind because we are chasing better returns.
Understood, sir. The second question on the 4 gigawatt cell and module capacity, which will be up and running in the next couple of quarters. Do you still intend to use the entire capacity for captive, or do you think there is a market outside your own requirement?
Yes, of course, there is a market outside as well. So as and when we are ramping up, as of now, we have sufficient, contracts ourselves to kind of deliver this modules and cells. But yes, as and when we ramp up, we will also look at the opportunity of selling outside.
Understood. My last question on the rooftop solar scheme. Have you got any color on the implementation? Is it right to say that there'll be no bidding like solar pump? Because solar pump, I think it was not to the desired way, right?
No, you are asking about solar pump or rooftop solar?
My question on rooftop solar scheme. Is there any color on the implementation, how this will get implemented? Because the solar pump scheme, I think everything was not to the desired way, right?
Oh, I think rooftop solar is more of a bilateral arrangement between you and the consumers, and there is a certain amount of subsidy that is provided by the state government or central government. Now the new scheme, of course, there is a central government subsidy, and in some cases the state government are topping up with some subsidy from their side also. So we will be executing that. There is a portal which has been created where people have to go and register, and then we will execute through an arrangement whereby we will respond to the consumers and implement the project, and they will get the payment of subsidy directly from the government.
All of this are summarized in slide number 34. We have kind of decoded the entire scheme in a very simple fashion to understand for everyone. We are kind of very bullish about the scheme.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. Next question is from the line of Vijay Kumar from Avendus Spark. Please go ahead.
Yeah, good evening, sir.
Sir, sorry to interrupt you. You're not audible. Can you please speak to the
Is
handset?
it better?
No, sir. Sounding little distant.
Yeah, I'll try my best. I'm talking on the handset only. So my first question is on the recent RBI regulations on project financing, where they have asked lenders to provide more, which is likely to have some impact on cost of funding in the future. Though it is in the draft stage, what is your sense on how this will impact us and if at all? That's my first question.
So I think the scheme has just come out, the draft, and we have looked at the scheme very initially. Couple of very high level observations that comes in is the requirement to make a provisioning during the project stage, and this could take up the financing cost a bit more. But that's more on a project financing basis, which smaller projects would normally do. Our funding is largely on a corporate loan basis, which we take at the infra holding company level. So I think we are kind of comfortable to that. The second big requirement is about the company owning about 50% of the land before they could disburse. You know, I would think that would bring a bit more about discipline in terms of companies who go for bids without the land and land up into a problem. So hopefully that will bring a little more discipline, in the way execution happens. But yes, we have been given 3 months. We are also trying to understand that better and make appropriate representations.
This is still a document for discussion, so I think it is too premature to say anything what will eventually come out. So let's wait and watch rather than trying to really judge based on what has been provided.
Okay. My second question is on your Mundra coal and shipping cluster-wise numbers disclosed in the PPT. So for this quarter, we are seeing that the EBITDA and the PAT for this cluster is lower than the last quarter. So can you give a color of how the Mundra separately is performing and how the coal is performing? What contributed to this sequential drop in profitability?
Yeah, so I think quarter-wise number is very, very difficult to decode because a lot of changes keeps on happening. But I think the best way is to look at on an annualized basis. On an annualized basis, the entire Mundra plant has run on Section 11 throughout the year, which is cost plus. And as we have mentioned earlier, we're trying to work on a cash break-even point.
Okay. And how about the sales and realization and say gross margins at the coal mining business side?
So coal mining, if you see the last year, the coal prices, especially in FY23, was very high. Of course, now the coal prices have stabilized. So this is the trend that we have been seeing for last 6 months, and it may remain in the same band for some more months. So the huge increase in coal prices and the dividend payout we saw, that was possibly a one-off and may not happen in near future.
Thanks, sir.
Okay. So the cluster-wise PAT at the full year level comes to around about 600 crores. So would this be like a number that we can expect in the next year also?
If you see for the year, there is, it's there in, I think in
Slide number 7.
In slide 7, you can have a look in that and see that how this whole type of projection is expected. Yeah.
Okay, sir.
Thank you. Next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Questions. First was on the impairment you've taken on the renewable energy assets. Can you talk about what drove that impairment?
Yeah. So this impairment we have taken on the acquisition that we did for the Welspun asset, Walwhan assets. And during the acquisition, we had paid a goodwill of about 1,600 crores. which during that time was allocated over 22 different assets. Overall, when we do the impairment test, there is a surplus available, so that's not a concern. But in some of the assets, there's a need for unbinding of the goodwill, which is a non-cash winding up, which is shown as an exceptional item. So this year or this quarter, we have provided for about 100 odd crore this quarter. And given that this is more unbinding and the goodwill at some point of time needs to be unbinded, we kind of expecting 100 to 150 crore of unbinding happening every year, which is again a non-cash charge and is reflected as an exceptional item.
Okay, thank you. Just on another staff paper on the power market pricing, you also have some exposure through Haldia and some through Prayagraj in the merchant market, and also in the FDRE also you're actually you're oversizing the capacity, so there is some excess generation. Any initial read? I know it's still early stage, it's still for discussion. Any early stage maybe thoughts on that? And when you look at power scale, renewable power excess generation, how do you figure out the variable cost in that excess generation through FDRE?
So I think FDRE is a combination of solar, wind, battery. You cannot decode a separate variable component as yet. And what we really look at during the bidding as to what is the appropriate cost and what kind of returns we need to generate. So I think it's too early to talk about the variable cost on that. You spoke about the merchant power, right?
Mm-hmm. Yes.
Yeah, so we have about 300 megawatt of overall merchant power available from Haldia and from some of our other plants. And of course, the relations have been good this year. Hopefully, depending upon the energy's demand supply situation, we are positive that we should be able to continue to earn good money from our merchant sales.
But this CRC staff paper, would this have any implication on that?
CRC what?
That is on the DSM.
On it's in a way capping the merchant power, if you read it correctly, the price that you offer for merchant power.
In the merchant power already there is a cap. Earlier it used to be 2 years back 20 rupees. Now then it was reduced to 12 and now it is at 10 rupees. So at this stage there is no discussion on capping it, the merchant power, because if you cap it then no one will generate if your ECR is higher than the merchant power rate. So I think these are general discussions that keeps on happening, but there is no plan as such to reduce the merchant power.
Just one quick question, if I can squeeze on the pump storage. I know you're starting construction soon. Any thoughts or developments on contract signings for that?
We are in the process of obtaining all the approvals, and also we will start the process of bidding for the civil, electromechanical and balance of plant. We expect the later part of this year to start the construction activity.
Thank you.
Thank you. Next question is from the line of Amit from HG Hava and Company. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Good evening, and thank you for giving the opportunity. My question was regarding the usage of CRR, capital redemption reserve, which can be taken to give bonus shares, which will help to save the interest expense by repaying the debt.
What is your specific question?
My question is is the company planning to use the capital redemption reserve to issue bonus shares so that the debt can be redeemed and interest elements of the expense can be saved?
Well, it's a hypothetical discussion for us because we are not issuing any bonus share. So we have not examined it. But if you're kind of wanting to understand the implications of that, we can work it out and discuss with you separately.
Okay, thank you.
Thank you. Next question is from the line of Sumit Kishore from Axis Capital Limited. Please go ahead.
Good evening. Thanks for the opportunity. My first question is that in the last annual meet, you all had laid down a plan to double revenue, EBITDA and profit over a FY23 to 27 time frame. FY24 has ended with a 10% consolidated revenue and 12% reported profit growth. And in the renewable EBITDA profit growth was in single digits. So, I mean, at this stage, would you review the roadmap of FY27 growth and basically sum it up for the three main business segments you are in?
So, when we had presented, we had said in 5 years' time we will be doing that, and we are on track. So we will be doing that. All the capacity add that we mentioned, more than 5 gigawatt of renewables, returns from the manufacturing plant are in project, the pumped hydro project. So all these will start generating revenue and profit. Similarly, our projects in transmission, where 2 of them are in very advanced stage of implementation and will get operational by end of this year, and another 2 by next year. So I think all of them, whatever we have plans, we are very much on track to deliver what we had presented last year in the analyst meet.
Sure. My second question is regarding DISCOM privatization. Over the next 1 year, do you have any expectations of progress in privatization of DISCOMs, and what opportunities are on the angle?
Yeah, we are expecting, based on our discussion, that large number of states are planning to go for something similar to Odisha. Many of them have gone and seen in Odisha the type of changes and type of improvement, and how it is a win-win for everyone. The consumer benefits by getting better service, better reliability, better customer experience, and also the tariffs have not gone up because whatever loss reduction happened, the benefit went to the consumer. The government has benefited by they don't have to incur any further losses, financial losses in running. And the DISCOM has benefited because it has been able to generate enough cash to provide better technology and services to the consumer. So I think it has been a win-win for everyone. And many of these states are now looking at replicating similar opportunity, and I do expect that post the election, many of the states will take up this initiative.
Sure. Is there any large state which is?
I'm looking at all the states. So there, apart from Odisha, there are 27 states, and apart from Delhi, there are 8 union territories. So all of them are my potential candidates.
Sure. Then, with the sharp dip in battery energy storage, standalone BESS bids, where do you see the load following feasible FDRE rate now? So do you see this falling and presenting a viable alternative to setting up greenfield thermal capacity in next 2 to 3 years?
Well, we have seen FDRE projects are going to be the new future, and the number of bids that are expected are very large, where you get a certainty of getting renewable power. There is huge pressure. It is not only about supplying, but there is a huge pressure from the customer side also, that they want to transition to clean energy, whether it is industry or commercial or even residential consumer. So there is a strong awareness level which has been created, and I do expect that going forward, more and more people will insist on getting green power, and it is not that you can supply any power to them and they will take it.
Thank you, and wish you all the best.
Thanks.
Thank you. Next question is from the line of Shubhadeep Mitra from Nuvama. Please go ahead.
Good evening, and thank you for the opportunity. So just carrying on from, I think, Sumit's earlier question on your targets of doubling profits over the next 5 years by FY27. So my question is that, is there a certain targeted amount of renewable that you're looking to add, let's say overall or on an annual basis, in order to reach that target? Because the assumption was that a larger quantum of your FY27 profits would now come from the green energy piece.
So let me tell you that in FY 2021, we had a revenue of nearly 29,000 crores. This year we have crossed 60,000 crores. We used to have a PAT of nearly 1,300 crores. We increased it to 2,200 crores, and this year we are 4,000 plus. So we had at that time said that we will do it 4 times. Not many people believed us. We have in 3 years doubled it, more than doubled. And we have said whatever we have said last year, we have said with full conviction that we will deliver it. So please take it on what we have said. We have a track record of demonstrating and will demonstrate it.
Understood. Okay. And with regard to the dividend, let's say the prior year's related dividend that we have received from ITPC, if we adjust for that number, what would have been the growth in the profits for the current year?
I think we will not be able to adjust for it for a simple reason, because we also had another dividend last year. So you have to, if you look at for a like-to-like basis, we had a higher dividend last year, right? To that extent,
from the
for a like-to-like basis will only go up.
So if I understand correctly, last year the higher dividend would have come from the coal-related operations, whereas this year it's come from the Zambian entity. Am I right in understanding that?
Yeah,
Yes.
partly, not
Partly,
to the full extent. And as mentioned earlier by Sanjeev, is that this is part of the old payment that we are getting. There's still some balance that we due. And also these companies have now making profit, so we will start getting dividend from those profit also. So yeah, these will be over and above our 3 main businesses, that is generation, transmission, distribution, and renewable. They will also supplement in terms of the profitability of it.
Understood. And so lastly, with regard to the regulatory assets both at Delhi and in Mumbai, that number has been growing every year. Do you foresee a scenario post-elections where there will be some relief on both these points?
So Delhi, the regulatory assets has reduced by more than 800 crores. In Mumbai also, we expect, because of the tariff increase that has been done in the month of March, in this financial year, we will reduce by another 1,200 to 1,300. Delhi last year, what has happened will continue in this year also. So I think the trend of the reduction of regulatory asset has already started, and it will get amortized in next 2-3 years.
Understood, sir. Thank you so much for answering my questions.
Thank you. Next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on a good set of numbers.
Rajesh, I'm sorry to interrupt you. Your voice is coming muffled. Can you please speak through the handset?
Yeah, am I audible now?
Yes, much clearer. Thank you.
Yeah. So congratulations on a good set of numbers and thanks for the opportunity. My first question was on the net debt level. There seems to be some kind of working capital release in this quarter of 2,150 crores. What is this pertaining to?
So I think again, a quarter-wise number can be misleading. The way I would really explain is when I look at the complete full year, my average working capital is close to about 3,500 crore, and so significantly lower as compared to all the past years. Couple of reasons. I think a lot of financial discipline has gone in terms of how we are collecting receivables. We have a big presence with the retail customers in our discoms, and there's a lot of efficiency build up which has happened. Also with respect to support from the procurers, all the timely payments are also happening. So all of this put together plus a lot of supply chain and inventory management has led to a significant reduction in our working capital. And of course, as a result of that, if you see, while we have done a 12,000 crore capex this year, almost an all-time high capex for the full year, our debt levels are almost constant, and our debt equity is almost 1 time. So I think we are in a very healthy, and comfortable debt position and cash position.
Yeah, I was coming to that. So basically, what would be our comfort level of debt for the current year and the capex for FY25?
Well, the capex is something that we have already said that, and some of you already alluded to that we are kind of spending more capex in the current year as compared to what we've done in the past. We already have a renewable pipeline of 5.4 megawatt will be executed over 2 to 3 years time. So that would lead to a significant capex of almost 10 to 20,000 crore every year. So this is kind of maybe a little higher than what the capex that we have mentioned during the investors call.
Okay. And we'll be targeting our debt equity at some kind of level to meet the enhanced capex goals?
No, I think debt equity, while we are standing at one time, which is a very, very healthy situation, ideally, any debt equity of 1.5 is fine with us. But I think while debt equity is in our mind, most of that, I think, improving our cash flows every year so that we can self-fund a large part of the capex is what we are working at.
Okay. And so my second question was on the wind assets. We've seen some kind of improvement in the new equipment in terms of CUF of the wind turbine generators. So given that and the fact that the tariffs have also gone up, will we be aggressively getting into wind projects in the future? Any direction on that?
So the FDRE and the RTC complex project that we do is all a combination of solar and wind, right? So we kind of not doing pure solar. It's always a combination of solar, wind, and battery storages. So yes, the answer is yes. It will always be a combination of all this, and to that extent, whatever wind power needs to be deployed, we will build those capabilities.
And any IRR number on the revised tariff and capacity utilization on wind, solar, etc. Any new IRR ranges that you can guide on versus what used to be 1 year ago?
No, the tariff is going up, and I think there is a bit of a sanity in the market in terms of what return they are targeting. But yeah, every company, depending upon the cost of capital, interest rate, will have their own definition of what return they want to target. We don't play on the low return kind of tariff, and for all the projects that we have done so far, we are kind of looking at a good return on them.
15% plus? Is that a right number to hazard?
I would say better than mid-teens, because that's the type of return we get in our distribution and transmission business, generation business. So yeah, we definitely look at much better returns compared to others.
Thank you. Thank you so much.
Thank you. Next question is from the line of Dhruv Muchal from HDFC Asset Management. Please go ahead.
Yeah, sir. Thank you so much. So the developer order book, the developer under construction renewable projects that you have is about 5.5 gigawatt, including hybrid, and you're guiding for about 1.5 gigawatt commissioning, I think, for FY25. So would it be fair to assume the remaining about 4 gigawatt would get commissioned in FY26?
It will be a combination of 24 months, 36 months. So yes, I suppose definitely we're targeting 3.5 to 4 gigawatt by 26. And the remaining, early 26 probably. So yeah, 2.5 years is something that we can, as of now assume. A quarter here and there is something that happens, but that's the plan.
And so when you give these hybrid numbers in the order book, I mean in the under construction portfolio, for the hybrid projects, does it include wind plus solar, and that capacity is the total capacity, or it's just the AC capacity that we are quoting?
No, so the one that we quote is the installed capacity, right? And the installed capacity for an FDRE or a hybrid or an RTC is kind of 3x of the PPA capacities.
Got it. So this is the installed capacity number that we're giving. Perfect. That is helpful. And so secondly, would it be possible to give what is the EBITDA run rate for the current RE portfolio? I mean the commissioned RE portfolio, which is about 4.5. On an annualized basis, assuming these projects were running throughout the year, what would be the EBITDA run rate be?
We will give you much more than that. If you look at slide 57, you can
So I was looking at that slide, but that's for the, so for example, a project got commissioned in fourth quarter, the EBITDA only for that quarter is considered, but next year it will be the full EBITDA. I was trying to understand what will be the run rate EBITDA or the commissioned capacity.
I think the way you have to look at it, look at the generation units, right? And this is the generation unit, you can calculate the per unit thing, because otherwise to decode basis which date the particular capacity was commissioned will become a too complex a thing.
Okay. Sure, sir. Perfect, sir. No worries. Thank you so much. Thank you.
And of course, for your modeling, if you need any help, we are more than happy. You can reach out to Rajesh separately. He can help you build your model on that.
Yeah, sir, because run rate EBITDA is a thing, I think it's a common concept in renewable companies globally, and I think even some of the Indian companies, which helps us, adjust for the seasonal or quarterly commissioning volatilities in the renewable portfolio. But sure, probably we'll discuss it offline, sir. Thank you.
Thank you. The next question is from the line of Gopal from SBI Life Insurance. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. My question was on this impairment which you have taken for WREL portfolio. So this is on account of what, sir? Is it like, the PPA remaining lives are coming down, that is the reason, or how does you impair it?
So when I think, let me just give you a conceptual reply. When we won this asset, we kind of paid a 1,600 crore goodwill, and then this goodwill were kind of allocated over the 22 assets that we have. Overall company as a whole, we have a surplus position, but on the certain few assets, because of various reasons, there will be an impairment because the goodwill amount allocated to those assets during that time was done out of certain different assumptions. And of course, this is a common parlance. Everyone knows that over a period of time, those assumptions may hold good or not hold. But I think what is important is this is more of an unwinding of the goodwill, which is a non-cash charge and an exceptional charge. And this unwinding absolutely will keep on happening every year because we have 1,600 odd crore. So you can assume about 100 to 150 crore of unwinding you'll see in the current year and going forward as well.
And so what is the remaining life of PPA for WREL?
There are various assets. So, I'll have to get into the detail of it.
Okay, sure. And sir, there are like, a change in the thought process for the government on capacity additions and...
Gopal, sorry to interrupt you. Can you speak a little louder, please?
Yeah. So there are changes in the thought process of the government in terms of, putting more thermal capacities. We in the past have always indicated that we will focus more on renewables, and even there are thoughts on basically, UMPPs and all. So will you ever consider a change in your thoughts on adding more coal capacities in future?
Well, we stay focused on what we have already communicated, so there's no change in our plans.
Okay. And sir, this what we have seen in the last year, almost 40 gigawatt of ordering was done in renewables. What is that we have won out of that?
Yeah, so I think roughly a little less than about 2 gigawatt is what we have won. But I was, as earlier explaining, we are not now doing the pure play solar or pure play wind bids, which is just consists of a large chunk of that 40 gigawatt. We are largely focusing on the complex bids.
Okay. Despite there is a improvement in the pricing.
Yeah, if you see the slide number 24, you'll get an understanding on the kind of pricing that is moving. And of course, FDRE complex bids, not everyone can do that. And to that extent, we are more confident that going forward, we will continue to have a portion of wins there. For example, last year, out of 40 gigawatt, I think the hybrid and RTCs were only 10 gigawatt. And out of 10 gigawatt, we have close to about 2 gigawatt wind already.
Okay, sure. And sir, on capacity addition side also, this year, I think we already, we hardly added 600 megawatt in the renewable portfolio. So you think this share can go up? Are there any, on-ground challenges which is restricting us in terms of, adding more capacities? What is that restricting us despite having a strong?
Last year, if you remember, the prices of the cells, modules, availability of land and various regulations, there were a lot of challenges that were there, and hence we decided to deliberately push out some of the projects, right? And to that extent, that has really helped us to still deliver the bottom line ambition that we have. But yes, we already have a little above 5.4 gigawatt in the pipeline.
Right.
One can expect 1.5 to 1.2 gigawatt getting commissioned in the current year, and and a much bigger capacity getting commissioned in the subsequent years.
Okay. And lastly, sir, on T&D side, on these transmission projects, do we have any targeted market share or any value in mind in terms of, because last year out of 40,000 crore, we win only 2,300 crore. So do we have any aggressive plan for the next year on transmission side?
No, so we are now looking at some of the states very aggressively. We won 2 of them. Again, we are selective. We want, because considering the timeline in which it has to be implemented and ROW issues in many of the places, we have been very cautious. So we will bid, of course, but we will be careful in the type of bids that we give. And we will create a good portfolio of transmission projects.
Okay, sure. Thanks a lot.
Thank you very much. Ladies and gentlemen, we'll take that as the last question. I'll now hand the conference over to Dr. Praveer Sinha for closing comments.
Thank you everyone for joining for this analyst call. In case you have any further questions, please connect with my colleagues, and we'll be happy to respond to you and also help you in making your model. We have tried to make the presentation much simpler and much friendly in terms of providing as much data as possible. But in case there are any further improvements that you would like, please inform us and we'll try to incorporate that in the future presentation. So thank you, and you take care. All the best.
Thank you.
Thank you very much. On behalf of Tata Power, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.